Japan, the mood remains pessimistic. A major survey on business confidence comes out Friday. The Tankan Report is expected to show that large manufacturers are still being hurt by the global recession. Mike Firn reports from Tokyo.
Japanese manufacturers have a lot of reasons to be more pessimistic than they were 3 months ago. Figures Monday confirm the economy shrank for 2 straight quarters, a technical recession that's likely to continue into the final 3 months of the year. A territorial dispute with China has disrupted production and cut demand from Japan's biggest export market, contributing to the first current account deficit in 31 years. The yen is strong, consumer prices are falling. Are there any reasons to be cheerful? One analyst who is paid to talk positive about Japanese markets is now talking chaos theory, destruction, emptiness, creation.
Forward-looking investments into higher profit businesses, exit of some weaker players, that's good news. Therefore, corporate earnings in 2013 in Japan, in our opinion, are going to be a major source of surprise. We expect corporate earnings to be growing at a rate of between 40 and 50% over the next 9 to 12 months.
But before you pitch your pension into the maelstrom, a word of warning. Prices go down as well as up, or in Japan's case, they just go down.
Current situation is, I would say, a deflation spiral. So after 15 years of prices decline, consumers and the corporate executives now, and government included, now expect that prices will continue to decline the next 10 years.
That's why politicians keep telling the Bank of Japan to adopt more aggressive inflation targets. 1% says the ruling Democratic Party, 2% says the main opposition Liberal Democrats, impossible, says the Bank of Japan. With this much uncertainty, it's hardly surprising that the bank's business survey is producing such a sceptical response. Tankan means short-term view, and in the extreme short term, Sunday, there's going to be an election which is likely to mean a change of government and a change of economic policy, if not an improvement in the economy. Mike Firn, CCTV, Tokyo.
For more on the Japanese economy, joining us here in the studio is Michael Czinkota, professor with Georgetown Business School at Georgetown University. Thank you very much for coming on the show. Let's start with currencies. Exporters are having a fairly good year. The Japanese yen has weakened of late. Do you expect that trend to continue?
Well, I think any exporter who would rely on currency values changing in Japan would be foolish, because the long-term trend has been that the yen grows more and more in value, and Japanese firms have been quite ingenious to be able to absorb all that pressure and still stay active internationally.
There's been recent reports saying that the Bank of Japan plans to loosen additional restrictions, effectively increasing monetary supply. How does that affect the economy? And try to explain for our viewers around the world the effect it would have on the Japanese economy.
Well, the idea, of course, is that it's easier to get money and people will be more active, but that hasn't really taken place the past 20 years. There has been financial easing, there has been quantitative easing, as we call it nowadays, but banks don't really want to lend and companies don't really want to spend.
So you're saying it's nothing new? We've seen this.
Absolutely.
We've seen
this, and the question will be much more, how do we get companies to become more active? How do we get customers to spend more money?
Well, that leads to the second half of the question, which is the plan for more monetary easing. Some are warning that this is a bit of a problem for the country as well, because you're also incurring other problems on the other side of the balance sheet. Is there a point where we begin to worry?
Well, I think that point is globally being reached fairly soon, because we're looking at for the first time, official policy position that we want to encourage inflation. And that, at least in the past, we haven't really ever said. We may have meant it, but we haven't said it. And as a result, we hope that people will spend rather than save, because if you save, your money gets inflated away. But apparently that's not happening. People are scared.
Speaking of the economies, the United States and China, two of the biggest economies that trade with Japan. There's been all issues with both economic growth in terms of this year, and as we look towards 2013, how does that affect the Japanese companies as they begin to plan their capex for 2013, and you can also include 2014 as well with that uncertainty?
Well, I think on a political level, there's of course the Japan-China problem, which has had a major effect on consumption of Japanese goods. But there's of course also the question of Japanese companies needing to invest more abroad. And that abroad should be China, should be the United States.
Professor Czinkota, thank you very much from Georgetown University's Business School.
Thank you for having me.